BHP says it will focus on growing its copper business through existing and incoming projects. That's after the miner's failed attempt to buy Anglo American because of its attractive copper assets. The firm is eyeing an expansion in copper given the commodity's role in the energy transition and a tougher outlook for its top revenue generator iron ore as China's economic growth slows and supply rises. The strategy update comes alongside the release of the group's annual results. Underlying profit rose 2%, beating expectations. That was supported by record iron ore output and resilient prices, which offset weak coal prices and the sale of two of the group's coal mines. A dividend of 74 US cents has been declared. This takes the total payout to $1.46 per share. That's the lowest full-year dividend since its 2020 financial year, but is still among the top four it has declared in its history. Sea Harvest has reeled in a 3% rise in interim revenue. The group says this was thanks to improved selling prices, which helped offset lower sales volumes of hake and dairy. But headline earnings per share reflect a 36% decline. That's due to a once-off gain on purchased loans, which was included in the prior period. No dividend has been declared. Resilient, that's how Master Drilling has described its first half performance. During the first 6 months of 2024, revenue rose just over 17% in dollar terms, but operating profit fell 62.5%. That's as a result of impairment losses recognized on a reverse circulation and mobile tunnel boring equipment. Looking ahead, the company is confident in its ability to perform well. That's as it has a pipeline of $599 million and a committed order book of $271.4 million. Brimstone's bottom lines come under pressure. During its half-year, the firm's investment in Sea Harvest was diluted due to acquisitions on that end. And this led to Brimstone recognizing a loss on deemed disposal of just over 562 million rand. That's pushed the company into the red, with the investment firm posting a loss per share of 121 cents. If that impact is stripped out, HEPS more than doubled. Brimstone says the economic environment, characterized by a volatile rand and high interest rates in South Africa, remain challenging during the period under review. Pick n Pay shareholders are bracing for tough times ahead. That's as a retailer has warned of a decrease of more than 20% in earnings for the 6 months to August the 25th. A statement from the group says this is in line with expectations communicated by CEO Sean Summers, and it reiterated Summers' assertion that the situation may get worse before it improves. The firm's trading update for the first 26 weeks of the current financial year show a 4.5% rise in group turnover. That was supported by Boxer sales, which rose 13.5%. Pick n Pay sales inched higher by just 0.1%. Results are due to be released on the 28th of October. Workforce is expecting a profit surge. The Employment and Staffing Group says half-year headline earnings per share should come in between 12.4 and 12.7 cents. This compares to the 1.7 cents that was reported in the previous period. The firm has given no reason for the sharp increase, but more detail will be available when the company opens its books on the 29th of August. Storage is lowering its dividend payout ratio, which has been at 100% since listing in 2015. The specialist self-storage REIT says key shareholders have been overwhelmingly supportive of its reduction plan, which was prompted by the high cost of capital. Storage will lower that payout ratio to between 90 and 95% of distributable income for its 2025 financial year. That news accompanied a 4-month trading update. It's described the performance for the period to the end of July as strong in the UK, with occupancy increasing by close to 4% when compared to March. Its South Africa operations, meanwhile, saw a dip blamed on a seasonality trends. Storage says a pickup should be on the cards for the second half. John James Falkvane will step down from MultiChoice's board of directors. This will come into effect tomorrow. Volkswagen's exit adds to the list of directors holding consulting deals with a group that have left in recent months. Africa's largest pay TV provider has been under fire from investors, with governance concerns raised around the consulting relationships held by a number of its current and former directors. Jubilee Metals has secured a power purchase agreement in Zambia. The 3-year renewable energy deal was inked with Lunsamfwa Hydropower. Jubilee says the agreement will ensure a reliable and continuous power supply for its company's Roan and Sable operations and address existing power shortages. The power purchase agreement starts on the 1st of September. In international news, Nvidia is likely to report that its second quarter revenue more than doubled, but investors used to its blockbuster results will be expecting even more from the artificial intelligence chip giant. Let's take a look at this package report for more insight.
It's getting harder for Nvidia to impress investors. The AI chip champion is forecast to say Wednesday that its second quarter revenues more than doubled. A forecast compiled by LSEG predicts they will hit almost $28.7 billion. And yet, even that might seem a come down, when the previous 3 quarters saw growth exceed 200%. Investors are also concerned that profit margins could suffer, hurt by the cost of ramping up production. There's concern too over possible delays to the company's next-generation Blackwell chips, which some analysts have said face delays. Customers are a worry as well, with some market watchers questioning whether big tech can sustain its massive spending on AI. Such doubts led to a 20% drop in Nvidia stock over July and August, though it later clawed back much of those losses. Now any big beat or miss on Wall Street expectations could fuel or shatter an AI-driven stock rally. Nvidia shares have gained over 150% this year, adding around $1.8 trillion to its market value and driving the S&P index to fresh highs. Also in focus Wednesday will be the company's prospects in China, where the US government bars sales of its most advanced chips. Investors hope new processors designed to comply with the regulations can drive sales growth and fend off a growing challenge from Chinese rival Huawei.